Hi traders, thanks for that. Welcome to the Daily European Open webinar this Tuesday the 5th of the 9th with myself, Adam House, Senior Account Manager. We take around about 10 to 15 minutes at this time every day to have a look at the opening of the European session, which occurs at 4 p.m. We've got the London session closely following that at 5 p.m. The reason that we do this is that we've got a bit more of a volatile time, most of the liquidity going through London, and as such we like to concentrate on some major moves in the market. With respect to the daily technical pairs. So on this webinar, we concentrate on the AUD US dollar, the Euro US dollar, and the pound against the US dollar. We also take a quick look at the USD yen and the GBP, or the Great British Pound, against the yen, gold, oil, and the ASX 200. Just take a quick look at the risk events coming up for the course of this week. When we talk about risk events, there's an umbrella of sort of risk in the market at the moment with respect to the North Korea situation. Obviously, you'd have to be living underneath a rock to not know about, obviously, the implications of the North Korea tensions that are happening at the moment. Broadly speaking, we've seen some big reactions on gold and particularly the US dollar in relation to these missile launches. The latest one obviously occurring over the course of the weekend, where a size 6.3 tremor was detected from North Korea in relation to a hydrogen bomb being detonated on North Korea home soil. Now, naturally, that sent the market into a few jitters because that's a very bold and audacious action from obviously the NK regime. Further news reports, depending on what you read, but some reliable reports in terms of Bloomberg and Reuters are indicating that there could be another missile launch as soon as a week's time. So what we saw on gold was obviously a natural bullish reaction in relation to that announcement as a safe haven asset. And the US, by design, as an inversely correlated instrument, started to emerge quite bearishly. Interestingly enough, on the other risk events, so the broad umbrella is obviously the main focal point, as you'll see a lot in the news, will be obviously the North Korea tensions, with the US and probably the world at large. On the sidelines, we've got economic announcements coming up for the rest of the week. We saw the AUD Reserve Bank of Australia leave its rates on hold at 1.5% today. It's a bit of a flat reaction on the market to that announcement. It was largely expected with 100% certainty that the RBA was to leave rates on hold at 1.5%. We saw a top in the market of around about 79.67, going down to around about 79.57. Not much of a reaction there, but as we speak, the Aussies held its ground, hovering around the 79.61 mark. So there's not really that much to read into. It might be a technical trade that comes up a little bit later on. We've got Wednesday, 11:30 tomorrow. We've got the AUD gross domestic product year-on-year second quarter, the 1.8% forecast as well. Coming up on Thursday, Canada Bank of Rate decision. Bank of Canada raised their rates not too long ago, remaining pretty steadfast as one of the highest interest rates pertaining to a currency at the moment. Be interesting to see what happens on the market in relation to the CAD, particularly the USD CAD. We've got the 2145 European Central Bank decision, where President Draghi will come into focus, issuing comments about dovish or hawkish comments in the market. It's really going to be a key driver about seeing whether the euro has, some ground to hold. Currently trading at 1.1904. Further dovish comments could actually spike that down, but we're seeing the euro hold its ground against an otherwise weaker US dollar on the geopolitical tensions that we discussed earlier. On Friday, we come up to the pound with inflation reports. We have a bit of a low-key speech by Governor Lowe in Sydney. Last time Lowe spoke about a month ago after the meeting minutes. It wasn't, that much of a big deal. It's really sort of a largely preempted speech, I would have thought. The main focus will obviously be, thereafter on probably the CAD with the net change in employment and the CAD unemployment rate. The CAD's been a pretty strong performer across the board, particularly against the US dollar of late. Would be wise to sort of stay consistent with the daily trend on the CAD particularly, sort of seeing, strengthen the CAD against most of the majors, particularly the US as well. So we'll just take a quick look at the charts here. And as I said before, we go through the AUD USD right through to gold, oil, and the SPI ASX 200 as well. These are daily charts, and the information that you're getting on your emails is intraday daily technical reports, but I do like to go through a bit of a broader picture of what's happening in the market on a daily time frame, just to sort of give you some, some clarification about, where broadly the trend is expected to go or continue. See, at the moment, one of the key technical drivers or one of the key decisions you can make from any currency pair with relation to two main indicators on your charts are a pivot level, which is designated as a P just here, and obviously the trend line. If we see on a daily time frame the price is generally hovering, or if there's activity of the price above the trend line and above the pivot level, then it indicates further upside on that particular pair. What we've seen that to be true of is obviously the Australian dollar against the US dollar, which is holding ground above support, above the pivot level here as well, and holding a generous gap above the trend line. By design, that will always go back to test the average. Otherwise, if there was no average, it wouldn't move. You see the same with the euro US dollar holding ground above the trend line. And the pound has had, a lot of jitters on the market in relation to upcoming Brexit negotiations. For one, some poor data coming out, historically low interest rates of 0.25%, which has really not seen the pound sort of rise as much as, say, other counterparts like the euro and the Aussie. But again, it's not a diabolical situation for the British pound at the moment. It's just waiting on some more key fundamental data to support more investor confidence. But by design, as you can see, if the AUD, euro, and the pound are pretty much up against the US dollar, then the US dollar by design would be down against a stronger yen. Now, the yen is a safe haven asset, much like gold and the Swiss franc is. As you can see from our comments earlier about the pivot level and trend line, we can see the price trading below the pivot and trend line with the emergence of a daily candle here, which is bearish. So the targets here are on intraday. We'll go through those in a moment, but you can see that very obviously here. As we say always, there are no guarantees in the market, but if you were to guarantee something with almost 100% certainty, it's the fact that US and gold are inversely correlated, where we see investor confidence shaken in the market because of the NK situation. Then gold, by design, has actually risen, and it's had a very, very good run of late. Obviously, interesting looking back, the first sort of missile launch was around here, and then over the weekend we saw the missile launch here. So, it's no coincidence that we see investor confidence turn to this safe haven instrument when that happens. And by design, obviously, the US has inversely followed. Oil, at the moment, we've got figures as long as 1 week ago where we saw a drawdown of 5.9 million barrels, but demand continues to outstrip supply. So what we're seeing at the moment is a bit of a long-term scenario for a good setup on oil. Many analysts saying back to levels of 50 or even 51, 50 and 52 an extension as well. Obviously, we're seeing a weaker pound against a stronger yen, the pound being weaker against the yen because the yen of the safe haven appeal as well. ASX has remained relatively flat throughout the course of today. Waiting to see how the rest of the mood shapes up for the market this week before we enter into any long-term positions, but it's a very consolidated market at the moment. Having said that, we'll just go through, in conclusion, what we usually do is go through a few intraday targets just to make sure that you've got all the relevant factual data from Trading Central. The AUD USD today is a long preference with targets of 79.85 and 79.95 in extension. We have the SPI 200 with short positions preferred to levels of 5645 and 5630 in extension. We have the Euro US dollar with further short positions preferred, even though we talked about the longer term uptrend, but there is an intraday short position preferred to 1.1885 and 1.1885 and 1.1855 in extension. The pound short positions preferred to levels of 1.29 and 1.288 in extension. USD JPY downside prevails with short positions preferred to 109 and 108.65. We have the pound against the yen under pressure with levels of 141.1 and 140.8 preferred. Gold, of course, is bullish in relation to that inversely negative US dollar. Long positions preferred to 1350 in extension. Might just add a side note there that the 1350 is a second level target. And yet again, we have third level targets preferred at 1362. Some people might say that's a hell of a while off where it is now, but don't forget that the price was, hovering around the 1260s and, the 1300s not so long ago. Now we're trading at 1335. So, never say never. bullish preference preferred intraday on the oil. The bias remains bullish with targets of 47.65 and 47.95 in extension as well. So if you need any clarification about the news events in particular, we'll be talking about, a lot about, the upcoming events as they happen. But if you need any clarification on the intraday technicals or long-term trading setups or interpretation of events in general, then please get in contact with your account manager at ForexCT, and we'll be more than happy to help you out. In the meantime, thank you very much for your attendance, and we look forward to seeing you tomorrow promptly at 4 o'clock for the next webinar on the Daily European Open. Thanks again for your attendance. Bye-bye.